Welcome to the Goldseek Nugget, a special presentation brought to you by Goldseek.com. Today's featured guest, James Turk, founder of GoldMoney.com. Welcome back, James.
Hi, Chris.
Let's begin with an article one of our favorite Goldseek Radio listeners sent over. A story from GATA, Bill Murphy, Chris Powell, that a London trader has decided to become a whistleblower. I'm sure you saw this on the bullion banks, that is. His name was Andrew Maguire, and he's a metals trader in London. He claims to have been told firsthand by traders working on the desk there at JP Morgan Chase that investment house rigs the market. Now, this is not going to come as much of a surprise to a lot of our listeners. He's contacted the CFTC and claims that these gold and silver markets are fully manipulated. What the government is essentially doing is just fixing the price, but they're doing so covertly.
Yeah, I think this is going to be a really big deal, Chris. Finally, there's someone who's willing from the inside and not only, restate all of the allegations, but apparently, from what I understand, he walked the CFTC through on a telephone explaining in advance exactly what was going to happen on a particular day when there was a news release just before the option expiry. And as I understand it, all of this is unfolded according to as he explained in advance to the CFTC. And further, this is all on recorded telephone conversations. So, if it works out to be exactly as advertised, this is some pretty good smoking gun evidence. The markets are being rigged.
Mr. Maguire points out that during key moments, this is where the manipulators attempt to take down the gold and silver markets.
Yeah, basically the gold cartel, the people who want the gold price to be capped and to keep it from advancing to its free market level. One way they do this is they sell a lot of paper. Not only do they sell forward and futures contracts, but they write a lot of calls, meaning that they're short gold. So what they try to do at option expiry is to get the gold or the silver price down as low as possible so that as many of the options that they've written expire out of the money. And that's basically, what Andrew had been explaining to the CFTC at a recent option expiry, how it was being taken down. But, the real significance of this, Chris, is that it introduced what Andrew himself described as a new dynamic in the market. And the new dynamic is that there's a huge naked short position out there. In other words, people have sold metal, and there just isn't enough metal around for those shorts to deliver. And, this is an interesting thing, because if you look at monetary history, the whole nature of fractional reserve banking, or to be precise here, fractional reserve bullion banking, where you don't have enough gold in reserve to meet all of your obligations, has always been a key point in monetary crises throughout history. And before the Depression finally ends, before the financial crisis finally ends, the banks end up defaulting on their obligations. It happened in the Great Depression when we are in a gold standard. It looks like it's happening here today. There will be defaults against bank obligations to deliver because there's just too much paper out there compared to the amount of physical gold. A good way of describing it is like musical chairs. There are never enough chairs when the music stops. And from the CFTC meeting was that there are 100 chairs for every piece of gold and 100 pieces of paper circulating for every one piece of gold. So it's going to be quite an event. And I think what's happening presently is the music has stopped because now there's a target that the hedge funds and the big players can aim for, which are the naked shorts in the physical gold and physical silver markets.
Couldn't happen to a better bunch of folks.
It's taken a long time. GATA's been at this for 11 years, publishing material from a whole variety of different writers. And the thing about the whistleblower is that hopefully this will put it into the mainstream press. The whistleblower concept is something that the press likes to get its arms around. And while they've avoided the GATA story in the past, it's going to be hard, I think, to avoid the GATA story now with the whistleblower.
Well, let's discuss the dollar recovery. In recent months, the greenback has rebounded from a near year-long decline, mostly on euro weakness from the Greek sovereign debt concerns. But the euro has shown some signs of life lately. Do you think this could be the death knell for the U.S. dollar?
Yeah, it's always hard to predict. Clearly, the dollar is on a long-term downward slope, and we're getting a bear market rally. It may go a little bit further, at least that's what the charts are sort of indicating. But the interesting thing is it's not really meaningful to compare the dollar against the euro or the euro against any other currency. What you have to do is compare these currencies against gold because that is really the numeraire. And the interesting thing is that even though the dollar has bounced in this bear market rally, gold is rising against the dollar. It's also rising against the euro and made new record highs against the euro. So what this is saying to me is that there's a lack of confidence in all fiat currencies, and that while the dollar might be bouncing because of short covering or people buying dollars to repay obligations, maybe some deleveraging or whatever, the bigger issue is that they're all of the fiat currencies are declining against the world's numeraire, and that's what gold is.
So you don't give too much credence to the hypothetical 15% gold backing on the euros?
Yeah, and we really don't know how much gold they have in the vault because central banks refuse to do honest bookkeeping. They show gold out on loan and gold sitting in the vault as one line item, so we don't really know how much gold they really have. I mean, this has been one of GATA's contentions all along. The central banks claim they have 29,000 tons, but, myself, Frank Venerosa, Reg Howe, and other GATA people have indicated that, it's probably less than half of what they really have. And, who's to say it could even be a quarter? They just don't do any honest reporting. So there's really very little confidence in central bank balance sheets and how much gold they really own.
Speaking of question marks in bank vaults, when we think of the piles or stockpiles of gold, most folks think of Fort Knox for the United States. But in reality, it's the New York Fed that holds supposedly 80% of the nation's gold reserves. Do you have any knowledge on whether or not there has been an independent check of the New York gold stockpile?
No, to my knowledge, there hasn't. Most of the gold in New York is not U.S. gold. It's basically gold owned by foreign central banks, foreign countries. During the 1960s, when all of the gold was moved out of Fort Knox, most of it went to the New York Fed and wasn't shipped across the Atlantic. There has been a lot of gold in recent years, particularly this decade, that has gone back to Europe, because Europe is the center of gold lending. It's not done in the United States. But, to my understanding, there hasn't really been an official accounting as to what's in the New York Fed in terms of an independent third-party audit, or what's in the Fort Knox or the depository at Colorado. And for that matter, there hasn't been an audit of what's supposedly stored in the Bank of England, and it had been historically one of the larger gold depositories.
You've gone on record, James, with a gold forecast of as high as 1,300 in the first quarter, perhaps as high as 2,000 before the end of this year. Technically speaking, we seem to be winding up for another potential leg higher in the months going forward. And then, of course, we're seeing demand come in from India. Yeah,
there were a couple of other parts to my forecast for this year. One was that we were never going to go back to a three-digit gold price. That's his history, just like a two-digit gold price is history. And the other part was that we would see the low for the year early in the first quarter. I think those parts of the forecasts are still solid. My guess on the near term here is we're going to probably probe 1,200 within the next couple of weeks and get silver up around $20. And my forecast for something well above 1,200 for the rest of the year for gold is true. I think we could see 2,000. Everything is falling into place for a short covering rally in gold and a scramble for physical metal. And given what I was saying earlier about how much paper out there is compared to how little physical, I think a 2,000 gold price is something that we really have to focus on by the end of this year.
All right, James, for folks who'd like to find out more about gold money as well as your book, please help them direct their web browsers.
Yeah, the book is called The Coming Collapse of the Dollar. It's now available in paperback called The Collapse of the Dollar, and you can find that at dollarcollapse.com. That website's run by my co-author of the book, John Rubino. And for Gold Money, you can find us at goldmoney.com. We're a very easy, convenient, and safe and economical way to buy gold and silver online, and we're presently storing about $920 million worth of assets for our customers.
Well, sir, we want to thank you so much for joining us on the program today.
Thanks, Chris. It's always a pleasure to speak with you.